Good morning, everyone. Welcome to this weekend update of what's happening in stock markets around the world. And certainly overseas, the global rally continues. America, Europe in particular. The Australian market is a bit sad at the moment. It goes through these patches, but certainly there's some very, very good things happening overseas. So let's jump in and have a look at the action from last week. The S&P lost 13 points on the week, but it was pretty mild, as you'll see from the chart in just a minute. And it's certainly been taking 2 or 3 steps forward and then 1 step back. So there's no sign of a rollover there whatsoever. I'm watching every little move in the US indices, and there's really no indication that we've come to the end of the run. Now that, of course, could change in the space of a few days or a week, but at the moment, it's just not there. The Nasdaq and the Russell indices, which are often good leading indicators of the general market, they're still strong. They actually outperformed the S&P last week, so that's a pretty good indication as well. There are still plenty of high quality stocks moving ahead. Now the S&P 500 is getting up towards the 2000 mark, and a lot of people are saying it's really that run has got to finish merely because it's gone up for so long. And whilst I don't disagree with that sentiment, it could go on for quite a few months and go quite a bit higher before it rolls over. We've certainly seen plenty of instances of that sort of blow off top occur in the market. But looking beneath the actual indices themselves, the sort of stocks that I'm trading in America and investing in America, there are plenty of really high quality stocks that are still moving ahead. And I've had personally an outstanding month with stocks that have trended up, and then there's been the odd really significant overnight move with an earnings upgrade as well. So the American market, there is still plenty of potential. A lot of these stocks that are they're sizable stocks. These aren't speculative stocks. A lot of them are in the 10 to $50 billion market capitalization range, which puts them in the top 20 or 30 stocks in Australia. Their earnings growths are strong. You can still buy them cheaply. Overall, there's just a lot more opportunities there than there currently are in Australia. Let's just have a quick look at this slide on the Aussie stocks, and then we'll go and look at some charts. Now the ASX index, it was down again, disappointing relative to what else is going on around the world. It was down 59 points on the week. Now a lot of that is due to the iron ore price, which is really under pressure. And if it breaks $90, then look out below. We could see a sharp move down in iron ore and an even sharper move down in iron ore stocks. Rio and BHP and Fortescue and the smaller iron ore miners have actually had a very, very tough couple of weeks. So it's concerns over the Chinese steel industry and the Chinese property market that are pressuring iron ore, and then combine that with really falling consumer confidence in Australia since the budget. I think a lot of people and a lot of businesses have basically pulled back, and that consumer confidence is affecting the market. We're starting to see companies like Flight Centre that have been just such stellar performers for a long period of time, now starting to just slightly downgrade their earnings for this year, and also putting out a cautious outlook. So that consumer confidence is actually having an impact on companies, and it's certainly having an impact on trading levels in Australia. So let's have a look at the markets. So we'll start with the S&P 500. You can see we started off the week with a day or two of gains. We had a couple of mild days down, and then the market steadied on Friday and went back up and closed near its highs. You can see the moving average is still rock solid, steady, and the index is well above the moving average. So that's indicating that there has just been no change in the trend, or no change in even the pace of the trend. So very, very strong still in America. Let's just look quickly at the Nasdaq. You can see only had the 1 day down and then actually went back up again on Friday. So the Nasdaq still looking really strong. And the same thing, the Russell 2000, it's a little bit off its highs, but you can see it's had a really strong month. It bottomed out in mid-May, and since then it's been all up, and it's been quite strong. Let's just look at the German market. Broke to a new all-time high a couple of weeks ago. So that's all-time highs there for the German market. And it eased back just a little bit on Friday night, but then again bounced nicely off the lows, and it's heading along quite nicely. And just quick look at the FTSE market as well. It's also near all-time highs. This is really a very significant level, and that's why it's just struggling to get through there. But the British economy is not going too badly. And if we can get a close above 6,900, then I think you'll see quite a surge in the FTSE index because that is such a key resistance level. Now, just looking at the Australian market, there's the ASX 200. You can see it looks nothing like the S&P 500, which is still heading up. Our moving average, the red line, it has definitely stopped going up now. It's basically flat. The index is just a little bit ahead of it, just a little bit above it, but it's really looking like, at best, a bit of a sideways market. And if we go to the materials index, so this is essentially BHP and Rio, you can see it's definitely in a downtrend now. We're several weeks underneath the moving average. So there definitely has been a change in the direction and the sentiment in that particular market. If we look at the banks in Australia, the moving average also just starting to flatten out. So it looks like the upward momentum in the banks has stalled. So they're not great signs in our market. So it's really a bit about poor liquidity and fairly negative trader attitude. It's hard to find anyone who's really positive about the Australian market at the moment. But look, the key thing is, and this is a really important message, is that there is always an opportunity somewhere. You just need to broaden your horizons and look for where the opportunities are. And at the moment, those opportunities aren't in Australia. They will come back, but there are fabulous opportunities overseas. And so it's quite an easy step to go and tap yourself into those particular opportunity streams. Now, turning to commodities, gold had a good week. The underlying metal rose $24 on the week, and it was the best move in gold stocks that I've seen in a couple of years. So extremely positive. When we look at the chart, you'll see how many consecutive sessions we had in a row where the gold indices closed on their highs. Individually, I'm also trading a few gold stocks in America individually, and the ones that I've been trading have exhibited even bigger moves than we've seen in the GDX index. Now, silver has stopped falling, it's holding its base. It had a reasonable week as well. And copper, though, under pressure. A lot of commodities under pressure at the moment. Slipped a little bit more down to 303. But certainly crude oil had a big week and surged to $107. That's, of course, a lot about what's going on in Iraq. There's the spot copper chart. So you can see it's definitely come off the boil from around $3.20 back to nearly $3 in the last month or so. Let's have a look at the gold stocks. So we'll start first of all with the underlying metal itself. This is gold itself. We've been looking at this big phase one pattern now for quite some time. I'll just tidy this up a little bit. So you can see here the red line is the 150-day moving average, and the purple line is the 20-day moving average. So you can see during most of the view on the screen, the trend was down. We had the 20-day moving average below the 150 and the 150 falling pretty sharply. Now that started to change around about March, so we started to see a bit of a change in the characteristic, and really now the market is heading sideways. We've got this big phase one base in process of being formed, and we've had a nice move in gold just in the last week. Now, I want to go and have a look at the gold indices, but first of all, let's just look at silver. So silver also having a pretty good week as well. But let's go and look at where the real action is in the gold stocks themselves. Now, there's been several little rises in gold during this period, but if you look at this period through here, you can see gold went up for a day, 2 days, and then we had a few days down. Again, this same period here, similar sort of pattern. You got the odd day that went up, the odd gap here and there, but it didn't do it day after day. Similarly through here. But in the last week, this has been, let's just zero in on here, this has been the most consistent rise that we've seen. So the GDX index is up around about 8 or 9% in about 10 days. So that's very positive. If we look at the junior index, it's even better. You can see we've actually formed new short-term highs. So very positive with respect to the gold indices as well. Now, just wrapping it up, looking at it from an overall strategy approach, you've really got to be cautious on the Australian market, because whilst there are now some much better buying, the lack of liquidity and the fairly negative pall that's hanging over the Australian market at the moment means that it's hard to see what's actually going to drive many stocks up. So whilst you might be able to buy value now, there's not much point in being in anything if you've got as much downside risk as you've got upside potential. And I think that's certainly the case at the moment. So I'd be very cautious on the Australian market and really just be looking to buy significant sell-offs in individual stocks. The selected American sectors that I'm working with are offering far better value and a far better reward for risk. And as I said earlier, certainly the results I've been getting have been very, very pleasing. Keep an eye on gold stocks. They've moved up in the last week or 10 days. However, gold stocks have a habit of going up, starting to suck people in and then slumping back a little bit. So we might just see a bit of an easing back in the next couple of weeks. But certainly gold stocks are showing the most promising signs that I've seen in 2 years. So some potentially good moves there. And if this market in new bull market in gold stocks starts up, then you're going to see gains of 100, 200, 500%, even more over the next 1 to 2 years. That's just the way it works with bull markets in gold stocks. So for anyone, obviously for members, you're receiving this information on a daily basis. But for anyone who's not a member of Specialist Share, there's information on our website. I can tell you now that we're going to be very soon introducing American stock recommendations into the service. So I'm pretty excited about doing that. And if anyone would like to communicate with me with respect to their trading and in particular the possibility of getting exposure to the really exciting things that are happening in the American market, then there's my email address. That's all for this week. Cheers.